Good afternoon, everybody out there in social media land. We're coming to you from NATP, and my name is Tom O'Sabin. I'm the Director of Tax Content and Government Relations. And with me is Larry Gray, our NATP National Government Liaison. And we got some breaking news coming to you right now being released by the IRS with regard to the Employee Retention Program and the moratorium that the IRS entered into last September. Larry, let's go ahead and take it right from the top. Go ahead and jump in whenever you like.
Okay, well, thank you, Tom. When I stop and think for a second, this actually ERC has been going on for 4 years and about 5 months, and it's one of those things that just seem to never ever go away. But I think what we saw today was IRS finally, after several months, giving us an update with some content to it and some guidance for it. So probably the biggest thing right out of the gate, I'll kick it off with one of the striking things that's been going on, because as NATP's representative in Washington, I've been hounding for 4 years about certain issues, and so. But I think the most important thing that they talked about to give us some insight was they've actually digitized about 1 million of these returns. Now, those, you have to realize, there's about 1.4 million returns still in the hopper to be processed. That's after people have withdrawn their claims. That's not the claims the money's already been sent out for. But they digitized about 1 million of those. And what I found really actually interesting, and the joke, I think, with the IRS to me was, I keep saying that there's a huge non-compliance. And after analyzing their analytics, they came up with the following. And the other thing, anything I say on this conversation is actually in the news release. So don't try to down. Please stay with Tom and I and understand the.
Okay, Larry, you might have frozen up on us there, but what Larry's beginning to talk to, we'll see if we can get Larry back on here. He has frozen up. What Larry was starting to talk about is part of what's in the release today.
Is relying
you
on
might remember, I think you were frozen up, Larry. Now go ahead, and you were starting to talk about the analysis when they digitize these claims that are pending, and go ahead and pick it up from there.
Yep. So what happens is, in this news release, anything I say in this conversation is in it. So don't worry about writing it down. But high risk makes up 10 to 20%. High risk, which means they're probably going to get a letter in the mail over the next few weeks that says, done. We're not going to honor your claim. You can go through appeals, done. But then this one, 60 to 70% are unacceptable. They have what they quote level of risk. Now, Tom, you and I are accountants. If I take 10 to 20 and 70 to 10 to 20 and 60 to 70, that means somewhere between 70 and 90% of these claims have issues.
Now, you told me there'd be no math in this conversation.
Well, I did. Okay, Tom, I've known you for years, so I know when I need to ask. But
you're right. So you're saying 80 to 90% of these claims have issues, or they're flat out going to be rejected. That's a huge percentage.
Up to 20% are just going to be rejected over the next few weeks. The next group, the 60 to 70%, they're going to have to do additional data mining. They're going to have to do additional analysis, additional information. But my point is that when you see this, could be 70 to 90% of all the claims of this 1.4 million out there, there's something wrong with them.
That's right.
And I think what that means is, so many times, our members, the people, the tax professional, not the promoter, they've been trying their best to do it right. The problem with it is that the promoters have been making us look like the bad guy.
Mm-hmm.
And so what I see here is the fact that it looks like finally the IRS, they've been finally listening to us. But I think that the most important thing here is if you think your client has a good claim and you don't understand the rules, that may not be true. So in the news release, it says don't take any further action. I kind of disagree with that. Mm-hmm. I think that if ERC, if you got a client out there that's got an ERC claim still pending, I think it's important that you say, what are these fundamentals? And I will tell you where I've done a lot of speaking on this, where the biggest problem is what is a qualified government mandated shutdown.
Mm-hmm.
It's not social distancing, it's not face masking, it's not because I can't go to a conference. It's what's your client's, here's what the law says. What is the operations of the trade or business? I'm a CPA. My operations is doing tax returns.
Right.
So that's my trader. So some of these promoters, they didn't even ask if you were under a mandate. So they would just say, oh, you can't go to a conference, you qualify. You can't get pencils, so you qualify. You can't get the paper you want, can't qualify. But I think the most important thing here is to understand, and I've got a timeline that I keep working on states. And for example, in Missouri, the last time, now I'm going to talk by state. I'm not talking about, if I talk about New York, I'm not talking about New York City, but the state of Missouri, their mandated ended. Think about this. Mandated ended June 15th, 2020.
Mm-hmm.
So you qualified under gross receipts or you qualified under business startup. The qualified mandate shutdown wasn't available for you if, now I'm not talking about if you were in St. Kansas City, it went on a little more. But we need a rule of thumb. Do you know when California government, the last state qualified government mandate was? June 15th of 2021. New York, June 25th, 2021. Here's where I'm going. If you've got a client, I think this is the biggest takeaway. It almost gives me cold bumps. But if you have a client that qualified for 6 quarters, that seems to be what the promoters did.
Okay, Larry. Okay, you're back. Okay.
But when did the 3rd quarter of 2021 start, Tom?
Well, it would have started then, let's see, October 1st of 2021. You said third quarter or 4th quarter? Oh, 3rd quarter, July 1st.
3rd. All right. So let's take California. The statewide mandate ended on June 15th.
It was already over.
So how can you claim the 3rd quarter for ERC based on a government mandated shutdown?
Now, Larry, all of that is good, but let's concentrate on the release that the IRS came out with today. And let me ask you this question. So we talked about the 80 to 90% that are either going to have issues or be flat out rejected. I think we also want to address the folks out there and our people who are also in attendance who have clients out there who felt they've got, good ERC claims and they're waiting for their money. And it may be the difference between whether or not they're able to keep their doors open or not. And I believe also in the release that the IRS said that they've got, again, based on their analytics of the research that they've done, they've got 10 to 20% that they refer to as safe claims that should be able to go ahead and be processed. And I believe they're telling us they're going to start working on those this summer. So I think that was more of where they were coming from, where taxpayers don't need to do anything. And maybe that's a little bit of support for those of you who are on this call, that your clients keep calling you and saying, hey, when are they going to get around to process this ERC claim? It's a difference between whether or not I keep my doors open. The IRS has identified that they believe there's 10 to 20% that are good, legitimate claims. Go to the points that you're making, and they're going to start working on those this summer. What does the summer mean? Well, the summer starts tomorrow, and it goes all the way to September. So I wouldn't say there necessarily be a check in your mailbox next week, but the fact of the matter is 10 to 20% of the claims out of more than 1 million that are sitting there, they identify as probably ones that are going to go ahead and get that process moving. But one more point I want to make, and I'll throw it back to you, Larry, is the fact that the moratorium hasn't ended, but I found it interesting in the report we got this morning that there's still about 17,000 claims per week that are coming in to the IRS per week. Isn't that right, Larry?
Yes. I want to go back real quick and to take the numbers out of it. Actually, in the release just released a few minutes ago, it says those claims will start summer. So later,
please repeat that, Larry. You froze up again.
Late this summer.
Late this summer.
The check in the mail, as you said, no, they're going to start processing those claims later this summer. But it also says in this release that they're also going to be still doing some more analytics even on those. So they're just because they said 10 to 20, that doesn't mean they're already getting ready to go out the door.
That's correct.
Because
I agree with you 100%.
So they need that. I think, speaking on the moratorium, I think the important thing there is why they kept the moratorium in place. See, they're going to work this first in, first out. So the first claims in will be the first claims they'll work out. But the reason that they can't pull the moratorium, the minute they do that, the promoters are going to be out there again going, well, the moratorium's over. Congress hasn't changed the deadline of processing. So until Congress, and they're trying to work with Congress, they're trying to get Congress to stop the filing. Until that stops, there's a good chance the moratorium will not be lifted. Because
I would
again,
agree with you. Yeah.
They're afraid if it's lifted, all of a sudden you're going to see these promoters out there again.
We'll be right back to square one.
Yeah. Oh, yes.
Mm-hmm.
And see, what happens is you and I, the tax pro, we're then going to be inundated again with our taxpayers saying, "Oh, well, now we can file again." So I think that this is a move in the right direction. And I think the other thing that we may see out of Congress, the Wyden on the Senate side and Smith on the House side. So we got a Democrat, Republican. They co-sponsored a bill that passed the House, would change the statute of limitations to 6 years on all of this. So there seems to be Schumer seems to be thinking about maybe bringing it through the Senate, and if it does, this will give the IRS give them a 6-year statute and that's what CI would really needs in order to develop criminal cases. So if I'm right now without congressional action, if I'm CI, I'm going to work that third quarter because its statutes have already been extended. So they still have time to do it. And I think one of the questions we're going to hear is the fact that
Okay, Larry, you've frozen up on us again. Okay, I'll talk a little bit about this while we're waiting for Larry to get. Okay, are you back now? You froze up you might want to take your thought back a little bit because you froze up again.
I said,
sorry about that.
If I'm the IRS CI, I'm going to look at that third quarter because the statutes have already been extended on that quarter. So CI has additional years to develop it. But if they do that, there may have been refunds sent out in the beginning that was the source of a promoter. And in that case, it may not be a free pass. So I think all in all, this is good. They're looking at possibly bringing back the voluntary disclosure program. The withdrawal program, which if at 1.4 million claims are pending, you can still withdraw it. That's still going on. So the withdrawal of the claim that you haven't received is still available to withdraw. The volunteer disclosure program is if you've already got the money, and I help several taxpayers participate in that program, and they're saying they may bring that program out again. And I think, Tom, if there's one takeaway that I think we need to monitor and watch, and myself, you, NATP staff will be on top of this. One's legislation, but I think in this news release, when they talk about they sent out this 12,000 letters, and out of it, they got over 22,000 claims that were improperly claimed for $572 million. The key here is not the number, is that was for 2020. Well, the promoters wasn't really active in 2020 because the credit was what? $5,000.
Mm-hmm.
So
much bigger in 21. Mm-hmm.
Yeah. So in 2021, they're getting ready now to send out a group of those letters to measure compliance. And I think what they're going to find in 2021 letters, I think the non-compliance is even going to be higher.
You might be exactly right in that, Larry.
I think there was confusion. IRS didn't get ahead of the curve and give good guidance. Mm-hmm. I think the promoters have been out there getting, it feels good, it sounds good.
Okay, we had Larry freeze up again. I wanted to comment that Larry had mentioned about that IRS is going to ask Congress for an
Letters,
extension of
audit.
statute of limitations on there. And with that statute of limitations, I would advise all of you, now you're looking at a 6-year statute, and that also applies to those who have already perhaps claimed to receive their money. Maintain your records. Make sure you maintain your records. And also, Larry, I think this represents a quantum change in how the IRS is approaching the filing of any tax return, or in this case, the ERC claim, in that rather than process the return and come back later to force compliance, they're actually looking at compliance on the front end. And I think we're going to see more of that. And we actually have advocated for that. You've advocated for it. Our government relations team has advocated for that. That if we have a better submission on the front end, then we don't have people having to scramble 2.5, 3 years later trying to defend what they already did. But a point, an important takeaway again, is if we have now a 6-year statute of limitations, if Congress approves it, then make sure that our clients, your clients, retain their records longer than they would have normally. Because we're talking about big dollars here. But go ahead, Larry.
And Tom, what you just said, I think is almost priceless, but let's move it up even to a different level. And I've reviewed probably a couple of hundred of ERCs for new clients. I've reviewed them for other practitioners. The one common thing I find is little or no documentation.
Right.
Okay. So I think you're great to kind of get toward a wrap here. I think your point of documentation, but Tom, I'm running into so many people. They say, well, the promoter has the documentation. And mainly what that is payroll records. They've never, if your tax client has not been asked about the government mandated shutdown, when it started, when it stopped, and that's the only justification, then you may want to talk to that client, because remember, NATP about 15 months ago sent a letter to OPR, Circular 230, and asked about, could we do the income tax return?
That's right. I was involved with you in that letter that we sent in. That's correct. And Larry is still frozen up. And what he was going to say is, when we asked OPR, would someone who's only preparing a return that's impacted by an ERC claim would not be held responsible? And OPR concluded that if you prepared any part of a return that's impacted by an ERC claim, you're responsible for that claim. So there's a good reason to document your files as well. So we do know now that, from the release today, your clients we believe they filed a practical claim, a proper claim, that the IRS is going to start working those this summer, and hopefully by the end of the summer you start seeing some action. There will be some of your clients that are going to receive a flat-out rejection. I specifically asked the question this morning when we were in a meeting about, will that be the end of it, as opposed to criminal investigation coming on the tail end and maybe proposing that someone has committed fraud? If the claim is just rejected, that actually may not be a bad thing, in that maybe there won't be another elevation of that issue to criminal investigation. And then there's that middle group. That's where all of you will be involved, those of you on the call, where maybe they're going to request additional information or more things to substantiate that claim. Not saying necessarily no, but they're not ready to say yes. So this, again, is a quantum change in how IRS does processing, and I think that's a positive thing. But what we're seeing, again, is a little bit of a move in this. And so for those of your clients out there, again, who have been sweating it through, hopefully they can trying to keep their businesses open. We see a little bit of a movement forward where the IRS does have identified, or has identified, what they consider to be, they say safer claims, meaning that all the ducks appear to be in a row. Employee retention credit, I've always said, Larry, and I think you would agree with this, it isn't manna from heaven. It's designed to help that business who kept paying their employees when they really didn't have the money to do it. And they're getting a return of that, not free money from heaven. I don't know, you probably have a different conclusion, but that's what I've said to people who've said, I got a call that said I can just get a free check. It doesn't work that way.
Right. Well, and I think that free check, or it's free money, or everybody pressure around the country, I think some of that, again, we're going to see a lot more activity. I think we're going to see a lot more news releases. I'm going to be speaking on ERC fraud at Taxposium. And with this information now, in a month from now, we're going to have even more insight. But I think what you got to realize when you see the numbers, Tom, that the 10 to 20%, they're just going to send out denial. And then when you look at the 60 to 70%, what it says,
Well, Larry has frozen up again, but I will say that,
worries me.
The 60 to 7% worries you because you had frozen up again. That, even I wanted to mention, even those who are rejected, if you believe with your client that you do have a legitimate claim, you will notice there will be an appeals process in that correspondence. In the 60 to 70%, you're going to have X amount of time to respond, to that notification. It's not going to be a flat out denial, but they want some more information to support that claim. I think that's what you started to say, Larry, but unfortunately you froze up again. Any other parting thoughts as we go through? We think this is a real positive move.
I think it's a real positive move. Just remember, 3 years ago, Congress is the one and Treasury said, IRS, send the checks out. We don't care. Send the checks out. Now, Treasury and Congress is saying, IRS, why did you do it? So they're having to clean up the mess. And guess where, when the IRS cleans up the mess, that's when you, I, and NATP members, we're at the bottom of the food chain. So we have to take care of the issues.
Right. So Larry, we thank you for your time today. We thank for all of those who came on the Facebook Live call to hear this update. Realize that we will keep you posted as soon as we get information. We'll get that out to you. Even if you don't hear something from us or see something from us, realize we are advocating for you behind the scenes and as publicly as we can in getting these information releases out to you. Larry, I certainly thank you for your time. I know the group does as well. So I'll say again, this is Tom O'Savin along with Larry Gray from NATP, and we'll say goodbye for just a while and have a great rest of your day. Thank you again, Larry.
Thank you. Have a great